Hey guys, thanks for tuning in. Today we have an interesting ETF to look at. We have the Grayscale Ethereum Trust. This is an interesting product because it was the first of its kind that came to market. It also has a bit of a complicated structure, but we're going to look through all of it today and see what's going on. So let's get started. Alright, so first things first. This fund actually holds around $857 million in assets. It was actually started way back in 2017, so it's been around for quite some time. The fund objective is to provide investment results that correspond to the price of Ethereum. Now, the strategy is to invest in Ethereum and related derivatives. So there's a little bit more nuance here than just simply buying Ethereum, which we'll go over in a second. But just know they do invest in related derivatives. The OM is $857 million as of September, and the expense ratio is 2%. Alright, next up, the parent company is Grayscale Investments, and they are a subsidiary of a larger financial group called Digital Currency Group. So the fund is managed by Grayscale Investments, and Barry Silbert is the fund manager. He's been in this role since 2017, and he's also the CEO of Grayscale Investments. Alright, moving along, the fund actually tracks the price of Ethereum. However, it doesn't track it perfectly. If we look at the holdings here, you can see that the largest position is Ethereum at 98.79%. And then there's also cash and cash equivalents at 1.15%. So the rest of the holdings are actually made up of various derivatives that make up the remaining 0.05%. So you might be wondering, why don't they just buy Ethereum and be done with it? Why do they need these complex derivatives? Well, the reason is that it's a trust. It's actually a GBTC, a Grayscale Bitcoin trust that's actually limited. So what that means is that you can only buy shares of this trust, and you QA actually buy Bitcoin directly from this fund. So that's why they're SA premium or discount to net asset value depending on the market conditions. Sometimes it trades at a premium, and sometimes it trades at a discount. Alright, so moving on to performance. The fund is up 12.36% year to date. If we look at the 1 year, it's actually negative 43%. 3 year is negative 24%, and 5 year is actually positive 81%. So you can see that this fund does not have a long enough track record to show a 5 or 10 year return. But if we look at the 1 year return, keep in mind that the entire crypto market has been down significantly. So a negative 43% isn't terrible compared to some of the other crypto funds out there. The NAV performance as of yesterday as close was negative 0.34%, and the market price was negative 0.6%. Now the difference between the two is because of that premium or discount that we talked about earlier. The fund actually compares itself to the MVI's Crypto Compare Ethereum Price Index, and it has a Morningstar rating of a C- as of October of last year. Alright, so moving on to fees. Like I mentioned earlier, the expense ratio is 2%, which is actually pretty high compared to most other funds out there. But again, this fund is a bit more complex, so there are additional costs that go into managing this fund, so that's why the fees are a bit higher. There are no front-end or back-end loads, and the turnover ratio is actually 36%. There are also no redemption, creation, or maintenance fees. Alright, so now we're on to risk metrics. Standard deviation is 51.36. The beta is 1.97 compared to a benchmark of 1. The Sharpe ratio is negative 1.83. The max drawdown is actually 73%, and the recent max drawdown is 38%. Alright, moving on to dividends, the 30-day SEC yield is 0%. The distribution yield is 0% dividend. Payment, schedule, semi-monthly, and there's no dividend growth history, because this fund actually did and pay a dividend in the past 10 years. Alright, so now we're on to taxes. The tax cost ratio is 0.92%. The capital gains distribution history is actually ordinary income, and the turnover is 36%. So that means that there will be some turnover tax implications as well. Alright, so now we're on to the pros and cons summary. The key advantage here is that this is an early mover in the crypto space. There is a first mover advantage. The main risk is that there are now many other crypto funds out there that have come to market that compete with this one, and some of them have lower fees. Alright, so now we're on to who is the ideal investor. The ideal investor here is someone who wants to gain exposure to Ethereum, but Cahoon directly purchase it and is okay with the fees. This would be more of a speculative holding or maybe a sector bet, and probably shouldn't be used as a core portfolio holding. Alright, so now we're on to recent news and events. There really isn't any major news except for some of the macroeconomic news that has been going on in the past year that has affected the entire crypto market. Also, another thing to note is that the industry is moving away from proof of work and moving towards proof of stake. And that actually helps Ethereum because it makes it more environmentally friendly and also less volatile. Alright, so finally here are some alternatives to this fund. You could look at the crypto market as a whole, or just look at some other crypto funds. There are a ton of them out there now. Some of them are similar, some of them are not. But just remember that this was the first of its kind, so it does have a first mover advantage. But as more funds come onto the market, there will be more competition, and hopefully fees will continue to come down. Alright, so that concludes our look into the Grayscale Ethereum Trust. Again, we look forward to seeing you in the next video.